Now, where do we go from here? Now, you have to understand where we at, and it's important you watch yesterday's video. I talked about it in yesterday's video. I told you to be even careful about shorting this because we lack liquidity. Now, this is what I'm talking about here between the 602 and 604. This will be important. I will talk about that, but you need to understand where we at. We broke out from that magenta, and I talked about this yesterday's video, so please watch it later. We broke out here, and we broke out from the green, and we had that beautiful continuation structure in that green algorithm here. Now, this is the exact reason why I told you do not short this until we break the green. Now, at this point, you do see that there is a lack of liquidity, 602 and 604. I want you to pay close attention to this range. And most likely, we want to see 5-day moving average catch up to here. Because if there's any downside, it will have to come through this liquidity level here. Now, we may be talking about a little later in the week, even maybe. So let's pay close attention to that. If this wants to dump, you need to see more tapering that's forming. Right now, we are still very strong in the buying and in that orange, which is still very strong as well. Now, if you want to see at least some downside, you need to see more liquidity being built on the break of that 606 with that yellow algorithm. But there is a caveat to this. I will talk to you later, or you wait for cups to close. Now, cups to close is always the best. You wait for cups to close because in that case, you will see perhaps 5-day moving average start catching up and we break this particular orange algorithm here. Now, once we break that orange algorithm here, you will want to see another handle that's forming on the breakout here. By then, 5-day moving average may turn into some sort of resistance if this wants to head down. So you have to be looking out for that 602, 604 before we start heading down. This may even take a longer time because we may take time to taper here. Now, if we taper here, look out for that structure 602, 604. Remember, if the market wants to head down, it needs to grab the liquidity there, and preferably with that 5-day providing more liquidity on the way down. I want you to remember this if you want to be shorting this. Even if there's bad news, it has to break down from that 602, 604 level liquidity there, so pay close attention to that. Now, otherwise, I want you to pay close attention because if magenta and orange is still in control here, you can still see that structure that start being formed of that 606 level, and you want to be looking out whether the selling is controlled and the bulls are just building more liquidity for another move up. Now, one big clue for that happening is if that 5-day moving average continues to remain as some sort of support. You see magenta building liquidity and you do not see clear tapering at this range here. Now, let's talk about the trend indicators. This is something you have been following me. You will know and understand and be very familiar otherwise. Now, remember, as we are at the upper Bollinger now, in order for this to continue going up, the market will want to wait for that 5-day to slowly catch up and for the upper Bollinger to continue trending up with it. So you see patterns like that if this wants to continue heading up, while waiting also for the 20-day moving average to also slowly catch up. By then, you will also see bottom Bollinger catching up as well. When that happens, that the market will run out of steam eventually, and we will retest the bottom Bollinger when it is appropriate, and that is probably when we have that liquidity level here near that 590 before we start heading up if the market wants to continue heading up here. So there may be a little pullback, yes, especially if the bottom Bollinger is trending up. This is your best bet that there may be a pullback, but please don't front run it. I've taught you how to be looking out for bottom Bollinger tests. Your 5-day must first cross below your 20-day moving average. But otherwise, if 5-day has sufficient liquidity, there is absolutely no reason to retest your bottom Bollinger. So at this point in time, especially when you see the 5 and 20 so close together, you can afford to wait. If you want to see a downtrend, you must at least wait for 5-day to cross below 20-day. So you can afford to wait here, but you have to understand there is a microstructure at this range of that 602, 604. Remember, pay close attention to that. So at this point in time, hedge. Don't forget to hedge. We are at the upper Bollinger now. But otherwise, absolutely beautiful. Nothing's changed. Do watch yesterday's video and the videos before that. You understand our thought process and how we changed our plays up to this point here. Thank you very much for watching. I'll see you closer to opening.